it. I've wanted him to do this, a deal maker, for a long time. All right, Derreck Long, where did you go? Oh, I thought you were running down the hall. Inside joke. All right, so Derreck's obviously a friend of mine. He's Quincy's nephew, and a lot of things. I could tell you some stories, but I won't, because I want to do a really short introduction here. But Derreck is a guy who, oh, that's awesome, will make you laugh a little. You're going to learn a lot. And this is going to be a power-packed 30-minute session, 25 maybe. And then we're going to go grab lunch. But wait for lunch instructions when we're done, please. Because feeding 300 people at the exact same time, it's actually probably closer to 350 this year, Derreck. Derreck, I just want to say thank you. You're a dear friend, a trusted advisor in my own life. Like when I have self-directed IRA questions, I know I can go to you. You're going to pick up the phone and you're going to help me as a friend. I really appreciate that. I've learned so much from your entire family. How about everyone stretch your legs for a second and give Derreck Long a loud applause.
Thank you, Jim. Thank you. Hey guys, I know, so we're going to be talking about retirement accounts and taxes right before lunch. So I'm glad it's not after lunch, otherwise, you guys would be falling asleep. So as we go into this, I want to stress to everybody that I am a real retirement expert. I actually had the privilege to go to Congress on multiple occasions and talk about things from the Secure Act to the Secure Act 2.0. I get to be a nerd and read a lot of things from court cases to a lot of IRS revenue codes and IRS publications. I stress this because I want you to be able to ask myself and our staff questions. So I do own and operate a self-directed IRA institution called Heritage IRA. As I say this, though, I want to stress to everybody that there's a lot of good self-directed IRA institutions out there. So everything I talk about today can be taken and used at every one of those institutions, okay? As always, quick disclaimer, this is only for your education, no tax, legal, investment advice in this specific setting. Diving right on in, what we're going to talk about is what you're really going to learn, right? What is a self-directed retirement account? Notice I'm actually changing the verbiage. Most of you guys have probably heard. A lot of you guys hear the term self-directed IRA. We're going to change that and call it a self-directed retirement account because there's a lot more out there than you realize. Why you ultimately want one of these accounts, the restrictions that apply to them, and we're going to end it on really how to get started. So let's start off, and I'm very much I pick on you. So it's going to suck if you guys are sleeping, eating chips or something, because I'm going to make fun of you. So what is a self-directed retirement account? Anybody brave enough to raise their hand? Otherwise, I'm just going to pick on you. Bueller, going once, twice. Sold to the young lady up here in the front row. What is a self-directed retirement account? I like that. It's a retirement account that you can do deals yourself. Wrong. Thank you. Great try. I appreciate it. Nope, they're fake. They're made up. They do not exist. There is no such thing as a self-directed IRA or a self-directed retirement account. What it comes down to is the institution that actually holds that retirement account. If I have an IRA at Fidelity, Fidelity lets me invest in stocks, bonds, CDs, mutual funds. So when Fidelity sets up a self-directed IRA, you get to self-directed in stocks, bonds, CDs, mutual funds. You come over to a separate institution like Heritage IRA, Directed IRA, Equity Trust, Inspira, I don't care. Insert your institution. Their accounts are self-directed, but amongst alternative assets. Real estate, notes, private placements, oil and gas, small business. Which one's better or worse? Neither. If I want to buy Apple stock, I got to go here. And if I want to buy real estate, I got to go here. Does that make sense? So I always get this, well, Derreck, I need one of those SIDRAs, a self-directed IRA or something. All those terms are made up. They really are. It's just fake. It's marketing terms, what we like to use as a sales individual, right? So what types of accounts can be self-directed? I need a more experienced. Is Jeff Watson in here? Oh, I don't see him in here. Darn, I was going to pick on him. So what types of accounts can be self-directed? The first thing that pops up are self-directed IRAs. These are the most common things and what you guys have all been taught. Who here has or has had a self-directed IRA before, whether it's with any institution. Love it. These are all what you guys have been taught. Self-directed IRAs being traditional and Roth, SEPs, Simples, HSAs, ESAs, right? We've all heard of these. Did you know there's more than just that, though? There's also something called a solo 401k. This is actually probably the most popular account, and almost every person in this room qualifies for it. The thing is, though, prior to about the last year to 2 years, there's been very little education in this area. A lot of institutions, even when they offered it to you, what they did is they said, here's your plan documents, good luck, figure it out yourself. So what's unique is Heritage IRAs bringing in the education piece for the solo 401k. There's even one more. It's called a Rob's account. Believe it or not, if I ask someone what is a prohibited transaction, and we ask some of these more advanced people in the audience that have used self-directed retirement accounts before, well, prohibited transaction is me using my IRA and funding my own business. You're right, that is prohibited in an IRA standpoint. But did you know there is a retirement account that allows you to use your retirement funds to start your own business? Huh. Interesting. So we have all sorts of different topics that we can educate and talk on. Now, we're not going to spend a whole lot of time on any one of these individually because I only got about 19 minutes and 46 seconds. So why do you want one of these accounts, right? First off, diversification. We all know that we can diversify our portfolios. I argue this is great. The real reason, though, I think would be the tax savings. Every single person that comes on this stage today, tomorrow, Thursday, is a salesperson. I'm here to sell you on why my retirement accounts are the best. The next person, guess what? I'm here to sell you on why notes are the best, why oil and gas is the best, why multifamily is the best, right? Put on that sales cap. Think of us real quick. Every speaker on the stage is a salesperson. But know that every one of those investments you look at, you can do in a retirement account and avoid all the taxes. Flip a house. Invest in oil and gas. Invest in those funds. Buy those notes. And have all the earnings come back tax-free. Lastly is control your retirement funds. If we look at the real wealthy people, and I know some of them, when I say real wealth, I'm talking $10 million net worth and above. They have full control of their funds. They really, really do. You need to take that control. And if you take that control, it will really help you understand why we can make more money. Okay? So there are some restrictions. And I hear a lot of different restrictions, so I try to break it down very easy. We can't use something like a self-directed IRA to invest in ourselves. I can't lend myself money, right? I can't use my IRA to invest in my beneficiaries. And just because I set up an LLC, guys, that doesn't hide it. I was talking to someone earlier like, whoa, but I'm going to put an LLC here in the middle. The IRS is not that dumb. But don't worry, it's not what you guys are trying to do. What you're really trying to do is use your retirement account, okay, to either launch a brand new business, use your retirement account to find new investments, or use your retirement account to maximize returns. So we're going to teach on a consistent basis each one of these topics. Knowing that, how do we use a self-directed retirement account? I don't care what it is. I always get, well, how do I actually use it? Well, step one, I got to set you up an account. I charge you $50 to do so. Right? Not bad. Now, once we do this, you need to go find an investment. Right? What is that? I don't care if it's a note, an LLC, property. I don't really care. Ultimately, your IRA will send money in exchange for the title of the asset. Now, who did the investment in this case? Did you or did the IRA? Did the 401k? Did the retirement account? Notice the retirement account's the one doing the investment. So guess who gets all the profit? The retirement account. That makes sense. So if I know the retirement account's the one receiving the profit, this is why it can be either tax exempt. Some people in the right accounts will call it tax-free. The proper term is post-tax, right? But behind the scenes, what we can see is that your retirement account is considered its very own entity. With Heritage IRA, we assign it its own tax ID number. It can have its own level of asset protection, its own name, its own address. You as the investor are going through all the same motions, but on paper, who did it? The retirement account. Now, with that, the IRS doesn't really seem to care too much what you invest in. The list they give us is pretty small. Don't buy alcohol, don't invest in alcohol, life insurance policies, cannabis, gambling, right? None of you guys are trying to do those things. If you are, it's the wrong meeting, right? So, notice this is a very, very standard practice. If we go to something maybe like the pros and the cons. Pros in this is there's always a custodial in the middle, right? We would be that IRA administrator, that IRA provider, right? Some places will label it as an IRA custodian. They get to charge you fees. Who cares? If the fees are making and breaking an investment decision at any institution, then it's probably a bad investment. So we charge $300 a year for every IRA that you're going to be looking at. Okay? There is always going to be back and forth from the custodian standpoint, which I think is unique. People will get frustrated with the custodians and the IRA administrators. Don't let that frustrate you. It's not that big of a deal. People get frustrated because it takes an extra week. Guys, you're closing on real estate. There's a lot of things going on behind the scenes. It's all right. Relax. Now, the solo 401k. Guess how we use this one? We do have to first qualify, right? You have to be self-employed by IRS's definition. So if I go by the IRS's definition on a solo 401k, what does that mean? I make profit. I make money. I pay myself. Well, Derek, I don't do that yet. We'll start doing it. Because if you do pay yourself, what we can do, did I do that? Well, look at that. Sound like Steve Urkel. Now I'm dating myself too. I am getting old. I'm getting grumpy too. Anyone out there getting grumpy yet? In the last year, I've been like bending over and my back's been cracking. I hurt my back the other day sleeping. Does that even make sense? Sorry. I get distracted. Squirrel. So notice this, right? We have to be self-employed by IRS's definition and no W-2 employees. If you have W-2 employees, guys, you don't qualify. But every single one of you can pay yourself some form of income and qualify for these accounts. These accounts are actually what every person in this room should have started off with instead of an IRA. Do you know why you guys started with an IRA? Because, man, Quest was smart. Who here had a Quest account? I love you guys. I was probably your salesperson. I really was. I sold those IRAs like no other. When the 401k, if we had the right tools in place, is actually what you guys probably should have had. But at that point in time, we really didn't. It took a long time. Very few institutions have the right tools in place because there's extra tax reporting, bookkeeping, record keeping. Heritage IRA does all of that for you. All of it. And that's what you guys need. So the 401k has a lot of benefits. If we look at what it looks like behind the scenes, look, you set up a 401k, and it looks just like the IRA. The 401k goes and does all the same investments. It really is. It's literally the exact same slide. I just put a little guy in the front. Now, why do we want these? First off, very large contributions. You can contribute up to $153,000 a year to a 401k. When we make this contribution, you choose, is this a tax deduction or do I want it all in my Roth? That's a large Roth contribution, right? Those contributions, being able to play with those, really help people out. Who's heard that they make too much money to contribute to a Roth? Well, your CPA lied. Thanks for raising your hand. You were very brave. You can actually lend money to yourself. I see people use this for a bunch of other additional benefits we'll talk about in just a minute. You have what's called full checkbook control. In the retirement industry, the number one question that every institution gets is, hey, can I have an IRA-owned LLC, IRA-owned trust, be my own trustee, be my own manager? And depending on who you ask, you'll get a bunch of different answers. There's a clear distinction on the 401k that, guess what? You can be your own trustee. That's unique. Okay? You get to avoid UDFI taxes. If you don't know what that is, don't worry about it. But if you use an IRA to invest in a syndication out there, you have to pay UDFI. So 401ks are exempt from that. And it's way cheaper on fees. Who here is already a client with me? Raise your hand. Hi, Wes. Thank you. Hi, Jenny. Got a couple other people. There's Rick. Rick's a Gold Family client. I'm charging Rick $3,000 a year because he has a lot of stuff. It's a lot. I don't mind. Pays my bills. But the 401k, did you know that not just you, but your entire family can actually participate in the solo 401k? Well, I thought it was just me. Nope. Misconception. So by doing that, for one flat fee, your whole family can participate in the 401k, and the max that we charge is $1,500. That's not bad. There's other, like I said, hidden benefits. Those loans to yourself up to 50 grand. I see people use that for masterminds and all sorts of other stuff. It's really unique. We got the ROBS account, which stands for a rollover business startup. I think these are unique, but they're not going to be for everybody. Probably about 5 people in this room, I'd argue, would even want to do this. All right, there's a couple of them, a couple of you guys out there. This is taking your 401k and using it to launch your very own business, a startup company. The IRS says it does have to be a startup, right? It has to be within the last 120 days. There's a bunch of other qualifications, which we go through with you. Ultimately, this is a great option, and a lot of us didn't even realize it exists. Why? Because you weren't educated on it. All of us here have only been ever educated on the self-directed IRAs. So I think it's unique that there's so much more out there than just the IRAs. So a bunch of benefits from the ROBS. We're going to skip all this stuff. Woohoo, look at that. Beep, beep. So what does Heritage IRA offer? We offer free education to everyone out there. Okay, we offer training, CE classes, tax reporting, bookkeeping, and I promise you we have the most knowledge in the industry, and I'm going to prove it to you. And it's all about how we got started. There's people in this very room right now that want me to fail. And there's people in this room that are the exact opposite, that want me to succeed. And as you talk to the people, and as you look around this room, and you look at the mentors, you look at every speaker that comes up here, every single person here is going to fall into one of those 2 categories. And you won't even realize the ones that want you to fail. It's a wolf in sheep clothing. And it was funny because I did not set out to start Heritage IRA. What happened is I was working with a separate retirement company. Most of you guys know who it was. And I left. It was tough. It was a family business, I felt like. But I went and I worked for a separate other capital raiser that a lot of you guys know who is, right? And when I was working for them, I noticed something really unique. You know what it is? I suck at being an employee. Do you know why? Because I dedicate my life and everything that I have to that company. And there's people out here in this room that do that. Right now, you're working a job. As you work that job, you're dedicating everything that you have to it. And they spit you up and they chew you out and they throw you away like it's nothing. And I realized that if I'm going to work 80 to 100 hours a week, I might as well do it for my own company. Would you agree? I did not look to start Heritage IRA. Instead, I bought a separate institution called SEP IRA-K. Who's heard of that? Most of you guys use it, and you don't even know it. SEP IRA-K is actually the bookkeeping accounting platform that almost every now self-directed IRA institution uses for their solo 401ks. That includes companies like Directed IRA and iPlan and Equity Trust. I don't care which institution you go with, you're my client. But you know what's the best way to test out that software? Start your own IRA institution. Now I can play both sides of the fence. And I can very positively talk about all the IRA institutions because I'm seeing both sides. There's not a single company out there that is trying to do bad. Who's here is frustrated with Inspira? I know it's frustrating, guys. Do you think they want to have bad customer service? Yes, someone says, yes, screw them. Oh, that's good. No, they don't. But that's not their fault. They don't know what they did. They bit off way more than they can chew. And that's okay. There's not a bad institution out there. No one's out there trying to be bad. So what we want to do is provide the education from that standpoint. And when I bought into this software company, I got to partner with a guy named John Paul Ruiz, or JP. Handful of you guys out here know who that is. No one else does, though. Hi, Quincy. Who's JP? He's the trainer. He trains every self-directed IRA institution, their entire executive team, and I don't care, close your eyes, click on an institution, they hold what's called a CISP license. Guess what? That's my partner. The guy that created the CISP license and teaches all the self-directed IRA institutions every aspect of the IRS revenue code and publications. And we came together and we were like, you know what? Let's do this. Let's launch this company. And as we went to launch it, we realized, oh man. Quincy, is it easy starting a self-directed IRA institution? No. Cost a lot of money, a lot of banking regulations. And then we got to figure out too, even what did the other IRA institutions do wrong? Who knows how IRA companies make their money? The fees. Nope. I like that thought process. Every self-directed IRA institution, though, can run solely off the fee income. That's not where they actually make their money. They make their money from something called an omnibus account. These omnibus accounts, right, is where your money actually sits, right? And then they earn interest on it and all the other good stuff, right? And then that's where the funding really starts to come from. And believe it or not, there's one institution in the U.S. that has given up that omnibus account. And when they set you up an IRA or a 401k, it is a count for count. It is a transaction to transaction. Anyone want to guess what institution that is? Heritage IRA. We're the only institution that we said we are solely going to operate off fees. What happened to Quest? Quest did not set out to do anything malicious or anything. They had the book thrown at them. Literally, the book was just thrown at them for nothing because Quincy was fighting an uphill battle. But it wasn't just Quest. Multiple other institutions fell into this trap as well. And we said, you know what? If we're starting this, we see where the problems lie, and we know what we can fix about it. But it costs a lot of capital, too, to get started. So we had this plan. Let's start Heritage IRA. Let's make sure we got the best education out there to provide to our clients. Now that we got the best education out there, where do we get the capital? And it was funny. I had this plan. I didn't know what to do. And I was like, so I actually was at a directed IRA event out in Phoenix. Great company, by the way. They're my competitor. I can tell you they're a great company. But sitting there and I was talking to a friend. That friend was Wendy Sweet. And I was like, Wendy, I have a plan. And I was like, I don't know what I'm going to do, right? But I have a dream, and I think we can launch this proper retirement company. I love to educate people. I love to come up and talk. Any one of you guys who's been my client knows that I've always been there for you. Most of you guys have my cell number. Most of you guys have worked with me for a long, long time, and you know that I'm going to give you the right answer, even if it's a tough answer. And Wendy goes, I'd like to be a part of that. Carolina Capital then goes, let's figure out what we can do, and they helped us get off the ground. That's someone that buys into your dream. That's someone that you invest with. That's someone that you want to work with. That's someone you want to partner with. Can you imagine that? God, how scary is it to go out there and say, I want to start a financial institution, I want to be an IRA provider, and then someone goes, I believe in you, go get it. Here you go. Wow. From there, we hired on employees. We haven't even launched yet, not even launched. We bring in employees, we start training them. I go, guys, I can't pay you a lot. I'm going to pay you dog crap. It really is. I can't pay you a whole bunch, but we have this dream. We know if we get off the ground, we can go ahead and provide all this out there. Man, we had an employee line out the door. It's awesome. So then we said, all right, we need to have a non-automated line so clients can call in. That way, even if it's not the right person that answers, you have someone that can call in. Wes, can I pick on you? We screwed up a lot of things with Wes's account. Oh my God, did we not? Yeah, he says a little. But we're there for you. That's what you need. We're here to make it right. We are a brand new institution, guys. We are brand new. And I promise you, we're going to make mistakes. Oh my God, are we going to make some mistakes coming up? Okay? But we're here to rectify it, and I want you to take a chance. If you're looking to establish a self-directed IRA, if you're looking to move out of your other IRA institution, if you're looking to establish a solo 401k or a Rob's account, I want every single person in this room to take a chance on me. Wendy did. Not just Wendy, but a lot of people did. A lot of employees, a lot of other people. And so what we did is if you want an IRA, it's completely free. If you want a 401k, we'll knock off $250. And if you need a Rob's account, we'll knock off $500. But I'm going to do more than that. I'm going to make it to where this offer is absolutely 100% irresistible. And what I mean is if you are not satisfied with every aspect that we are going through with you, we'll give you 100% money back guarantee. Wes, have we charged you any fees? Huh. I'm here for you guys. I want every person to scan this QR code or text right now that number up there. If you text that number, free retirement account, I'll make sure that someone works with you privately and personally to get you taken care of. My little thingy came off. So that's it, guys. That's all I have. So I hope that helps. Take a chance on Heritage IRA. Let us work with you. Text that number that's up there. So, Jim, give me a hug.
Thank you so much.
Yeah.
All right, that was a great offer. Derek, if you'll get me that info, I'll include it in an email soon also to help you, okay? Who wants to help Derek grow his IRA company? I do. I encouraged him to stop being an employee a while back, so I'm glad you did that, Derek. Okay, two things. First of all, earlier this morning I was thanking Rita about there's a bit of an echo, about doing such a great job on my team, her and Melanie. And she wasn't in the room, but now she is. Rita, come on over. How about a loud round of applause? Isn't she the best? She took us with Dealmaker to a whole new level. So thank you for that. Now you got lunch instructions, half and half, networking in half, and half's going to lunch. But go ahead and direct us.
Okay, team, since there is 300 of you amazing humans, if we all go to lunch, it's going to be a really long line. So if we could slowly exit, we're going to exit the back right door and the back left door. I don't care, as long as like the half of the room, that's fine. There's 2 buffets, they're double-sided, but just take your time. So exit there, the beginning of the buffets are on the ends here. So you're going to exit, come back into the room in the center, and enjoy networking for an hour. You're having tacos. So it's 12:17. We're going to be back at 1:15 ideally, so less than an hour. So slowly exit out the exit side doors, guys. Enjoy lunch.